Massive volatility today, serious market whiplash. Everything is shaky, stocks, crypto, you name it. But why? What's really going on? Here's the real reason markets are swinging hard to start the week. Moody's, one of the big global credit ratings agencies, just downgraded the United States credit rating from AAA to AA1.
Credit ratings agency Moody's downgrading U.S. debt to AA1 from AAA over the weekend. The agency citing the budget deficit and rising interest payments on government debt in a high interest rate environment for that cut.
This means the U.S. has now officially lost its top-tier credit rating from all three major agencies. Now Moody's has joined them. The result? More chaos in the markets. So don't get distracted by the noise, understand the real picture. Let's break down what this really means for Bitcoin and crypto. Yes, this downgrade sounds scary, and it's obviously not good news, but honestly, it's not a huge deal. Here's why. It's a lagging indicator. This was already priced in. The other two agencies had already made their downgrades, so this was more or less expected. In fact, in the bigger picture, this actually helps Bitcoin. Why? Because it pushes more investors toward non-sovereign assets like BTC. It's just another step toward legitimizing Bitcoin as an alternative reserve asset. Sure, it's a negative headline and markets did react. But Fundstrat's Tom Lee says this is not a crisis, it's a buying opportunity.
I don't know if there's much signal in the downgrade Friday because I think the first AAA downgrade was Signal from 2011. I don't think Moody's had any information that we didn't have on Friday afternoon, so I think markets should realize the bond market largely priced in the fact that the U.S. is really not AAA anymore. So I'd be viewing this as a buying opportunity.
So again, this is a dip worth watching. According to Tom Lee, higher highs are coming. He's talking stocks here, but keep in mind, Tom Lee is notoriously bullish on Bitcoin and crypto too. Now, when it comes to crypto specifically, we're even more bullish, and here's why. Two major crypto legislation bills are about to be passed. The first one, the Market Structure Bill. This is a game changer. It'll create a full regulatory framework for the entire US digital asset ecosystem, covering exchanges, brokers, and intermediaries. It'll define which assets fall under the SEC and which fall under the CFTC. Finally, clarity. The goal is to pass this by August. Then there's the stablecoin bill, which also has massive potential to bring institutional money into crypto. It failed its first vote in Congress recently, but it's back. Senator Bill Hagerty is one of the main backers. He explains it clearly. This bill establishes a legal and regulatory framework for issuing stablecoins in the US. Stablecoins are backed 1:1 by US dollars or short-term treasuries, so they're safe. With transparency and disclosures in place, these digital dollars can finally go mainstream. This isn't about speculation, it's about building the fastest, safest payment rails in the world. So yes, the floodgates are opening. You could argue they started to crack open with the BlackRock ETF filing in 2024 or when Trump got elected and began supporting the space. But now, they're about to be blown wide open. Here's a stat to remember. 95% of Bitcoin is already owned, but 95% of investable capital still hasn't touched Bitcoin. Michael Saylor puts it into perspective. Sovereign wealth funds are entering the market. Whether he's talking about Trump or Larry Fink doesn't really matter. The core idea is this. Sovereign money is entering Bitcoin.
And so if the most powerful man in the world says it's digital gold and says don't sell your Bitcoin and we're going to buy more, I think that the last hurdle has been leaped in terms of on the path to legitimacy.
So tell me, if you're a sovereign wealth fund, Saudi Arabia, the United Arab Emirates, Kuwait, how would you be diversifying that portfolio? How much Bitcoin would you own?
All of it. To tell you the truth, I think it's kind of an IQ test. It's like if you had $1 billion and you wanted to double it, you would buy the $1 billion of Bitcoin and put out a press release. But if you wanted to make $1 trillion, you would try to buy as much as my company has right now. You go buy $50 billion worth of Bitcoin and just keep buying, and it'll be $1 trillion to you. So you ought to buy as much as you want money, right?
Yeah.
I think that my forecast for Bitcoin is it goes up 29% a year compounded for 21 years, which is going to be 3-4 times better than the next best thing. So yeah, I could tell you, yeah, put 5% of your portfolio in it, but smarter would be to put 150% of your portfolio in it. If you want 10x your money, you buy Bitcoin. If you want 100x your money, you buy Bitcoin with somebody else's money. And if you want 1,000x your money, you use somebody else's money, buy Bitcoin, and you lever it, right? The simplest thing going is borrow money at 3, 4, 5%, invest it at 30 to 60%, keep the difference.
Did you catch that? That's the reason more people are now calling for $200,000 Bitcoin in 2025 or early 2026. So if that's the case, $200,000 is too low. Maybe even $500,000 is the real target. Bottom line, the global money supply keeps growing, and more indicators point to a massive Bitcoin breakout in 2025 and 2026. Yes, markets move in waves, but the next move from $110,000 to $125,000 BTC could happen fast. After that, everyone will start to realize what's happening. Get ready. Subscribe to the channel. We're America's #1 crypto YouTube channel, and we've got banger content. 2025 will mint new millionaires. If you've ever wanted to change your life through crypto, now's the time. We bring you what Wall Street insiders already know, what they're saying behind closed doors, and we're just getting started. Yes, we're massively bullish.